here at Raffingers, and today I want to talk to you a bit about company cars and mileage, just because we tend to get a lot of queries from our clients around what to do with company cars and how the tax benefits work, and the same with mileage. Now, the government's policy on company cars and mileage is really designed around lower tax for low emission cars, and they've made no secret over that for the last couple of years that this is something they're going to be focusing on and trying to phase out diesel and petrol cars in the next 10 years or so. Now, when you're looking at company cars and mileage claims, the three things you need to really consider are the car's emissions, the car's value, and your individual tax rates. Once you've got an idea of those, you can quickly work out what the tax implications are. Now, the first thing to consider is something known as benefit in kind. Effectively, what benefit in kind is where employees and directors pay a benefit in kind for use of a car which is provided by the company. So very simply, what you do is you look at the benefit in kind charge by applying a percentage to the official value of the car. So this is known as your P11D value, which is usually basically the manufacturer's list price of the car when new. Then when you've got that value, the benefit in kind charge, you then look at a percentage which is determined by the CO2 emissions. Now, effectively, the higher the CO2 emissions, the higher the percentage rate. And then once you've got that percentage, you then multiply the benefit in kind charge by that percentage, and you've worked out effectively what your benefit in kind should be. And then the employee, the individual who gets the benefit of that company car, will pay tax on that at their personal tax rate, which is usually collected through their PAYE system. And it's worth bearing in mind that the company will also pay 13.8% in terms of Class 1A on that benefit in kind. So as you can see, there's a lot to consider in that calculation. It may seem very simple and straightforward. However, there is a lot to consider with regards to benefit in kind and making sure you looked at the emissions. Now, in terms of mileage, again, mileage seems to be some sort of minefield for clients. You know, we get all sorts of queries and questions and people asking us, how should I claim my mileage? I've got a company car, I've got a personal car. The company's paying for the mileage, I'm paying for the mileage personally. So very simply, there's three ways of looking at this. Firstly, you've got this car fuel benefit charge. Now, effectively, when you've got the car fuel benefit charge, you're looking at when the company pays for the fuel. So you work out a value which for the 21-22 tax year is 24,600, and you multiply that on a scale charge, which again is based on emissions, and all the tables and all the other bits in terms of emission values and percentages will post just after this video that we're going to be putting out today, so you'll have a chance to go through those. And then you've got the advisory fuel rate, and effectively that's where the company car you're using personally, basically, and you're paying for the fuel personally. So what you do is you've taken the company car, you're using that personally, you use the advisory fuel rate, and effectively that's based on the size of the engine and the type of the fuel used. Again, we'll put some tables out after this video for you to look into those. And finally, where you're using your own car. So where you're using your own car, you look at your approved mileage allowance payments, and this is the usual sort of 45p per mile up to 10,000 miles, and then 25p per mile thereafter. So again, you've got three of those different mileage claims that you can do. It all depends whether you're using a company car, a personal car, and whether you're paying for it personally or if the company is paying for the fuel. So three considerations there. Now, one of the main things I want to talk about today is around the electric car option. Now, the electric car option has exploded in the last sort of 2 or 3 years, and it seems to be the biggest sort of area of questions that we get from clients who are looking to buy, whether it's electric cars or vans for employees or for directors. And ultimately, what it comes down to is a number of different areas that I want to touch up on today to look at whether you should go electric or not. Now, the key hesitation from a lot of clients to not go electric, given that the tax advantages of going electric are very good, is due to the infrastructure. A lot of businesses look at this and go, actually, the infrastructure for charging points and that sort of thing isn't there. Now, one thing I would say, in the last sort of 8 or 9 months, what I have seen, the infrastructure for electric charging and electric cars has really been ramped up. So I believe in the next sort of 2 or 3 years, this is going to be an area which is going to explode massively for company cars. Now, the first thing to consider is government grants. There are government grants available whether you're buying a car, a small or a large van. Now, ultimately, what it comes down to is when you're buying a company car, you've got to meet certain conditions. So, for example, the car has to be brand new, its CO2 emissions need to be 50 grams per kilometre or lower, and then effectively the car should travel at least 70 miles, sorry, I should say, without any emissions, so on its electric range basically. And it must cost less than £35,000. So for those of you looking for the Tesla option, unfortunately you won't get the government grant on sort of the higher range Teslas. Now, effectively, that company car that you take out as an electric car, that government grant basically will give you 35% of the purchase price, which is capped at £2,500. And ultimately, what it means is that will come off the list price when you're buying that car from the dealer or through sort of lease values. And the same sort of thing with small and large vans. The benefit is just capped slightly differently. So I think for small vans, it's 35% of the purchase price with a maximum of £3,000. And for large vans, again, 35% of the purchase price up to a maximum of £6,000. So what you can see is as you start to add this up, electric cars do become quite efficient financially because you can get some good government grants. The next point to consider is capital allowances. Now, capital allowances, to put it very simply, are a tax allowance for any asset that you buy. So if you buy an asset, you get some figure, call it a capital allowance, to come off your taxable profit for the company in the year. Now, the government's made it really attractive for electric cars, where they've said basically, if you buy an electric car, so remember, this is not buying it through certain finance arrangements like leases where you're effectively renting the car. This is actually looking to buy a car where the asset belongs to the company. So you're looking more around your PCP and HP arrangements. And ultimately, what it means is that if you meet certain emission levels, there is a possibility for you to get 100% of the value of the car off your taxable profits. So, for example, if the CO2 emissions are 0 grams per kilometre, you get 100% first year allowance. Between 1 and 50 grams per kilometre, that's 18% capital allowances. And then over 50 grams per kilometre, you then go to 6% capital allowances. And again, when you start to add these figures in, you're getting the government grants, you're getting the capital allowances, it starts to become very, very tax efficient to go down the electric vehicle route. And the final sort of piece in this jigsaw for the electric cars is the benefit in kind. Now, the benefit in kind for electric vehicles are a lot lower than they are in comparison to petrol and diesel vehicles. And like I said at the top of this video, this is the ultimate aim from the government to try and phase out petrol and diesel cars by 2030 effectively. Now, for the 21-22 tax year, electric cars attract a benefit in kind charge rate of just 1%, which is absolutely mental to think that you're going to be paying just 1% of that in terms of the list price of the vehicle and the benefit in kind charge. Now, in this year's budget, the Chancellor has announced that going forward for the 22, 23, 24 and 25 tax years, that's going to increase to 2%. But again, that's very, very low. So just to give you a little example of that, if you looked at, for example, like a Jaguar I-Pace, a very popular electric car at the moment, with a range of, say, 298 miles, costing about £70,000, the benefit in kind charge for the current tax year on that vehicle will be about £700. And let's just say you're a 40% taxpayer, you're at the higher sort of rate of tax. The actual tax cost for the company to provide you with that car would only be £280 per annum, so that 1%. And ultimately, going forward, it will only be £560 from the 2022 to 25 years. So ultimately, what you're looking at is you're getting a company car and you're paying peanuts in benefit in kind. So these are the three considerations to look at. You've got your government grants, your capital allowances, and your benefit in kind. And these three items, when company directors and employees look at it, they're shocked to think actually it makes financial sense to go down the electric car route. The other thing to also determine, and something that we've been looking at for clients more recently, is around the electric charging points. So some of our clients are actually looking to install electric charging points at their place of business. And ultimately, if a business does install this in the workplace, they can claim 100% first year capital allowances on these electric charge points. So again, something to do a bit of tax planning on. And also, if the employer allows the employee to charge up their own electric cars at the workplace, this is not a taxable benefit in kind. So it's not like providing fuel or mileage to the employee. So again, something to consider. And the other point to look at, which we've seen for a lot of our sort of type of clients who have vans, are in the electric vans. Now, electric vans are becoming very, very popular, and the range of electric vans that are out there at the moment are ever increasing. And so pretty much from April 21 this year onwards, there will be a zero van benefit for employees who drive full electric vans and use them personally. So you could be a company director and you could have an electric van and you won't get any benefit in kind for using that personally. So as you can see, electric vehicles, whether they're cars or vans, have a huge potential to give you some really good financial benefits. So ultimately, what it comes down to is if you are considering this and you are looking to go down the electric route, your best thing to do, and this is what I advise to all clients, is contact us before you make any decisions. Because what we can do is weigh up all the different options, because it all depends on what vehicle you're buying, what the emissions are, and also what type of finance package you're choosing. You could be going down the leasing route, you could be going down the PCP or HP route, and this will all change the tax benefits that you get. So it's very important before you go down this route that you give us a call, and we're always happy to provide as best advice as we can to help you make any decision.